Good morning. You're watching Market Cafe on ET Now with me, Shreyansi Singh and Snehi Shah. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are flagging as well. But let's get started then and look at the international handover. What are you looking at, Snehi?
Well, absolutely, Shreyansi. So our markets were shut yesterday, and well, we are looking at a truncated week going ahead as well, because even Friday is a holiday on account of Good Friday. But let's take a look at what the US markets did on intraday basis yesterday, and well, not so positive when you see the moves on Wall Street yesterday. All three indices have ended in the red. Now, US stock futures traded near the flat line on Monday night after the major averages took a breather from their rally. Dow Jones Industrial Average futures, they inched up just 11 points. Futures tied to the S&P and Nasdaq added about 0.1% each. But however, the three major averages, like I mentioned, ended Monday lower. The 30 stock Dow dipped 0.4%, S&P 500, Nasdaq, both of them were roughly down 0.2 or 0.3% each. Now the pullback comes on the back of last week's strong gains, during which the indices reached their new all-time closing high levels. Now, month to date, the major US stock benchmarks are on pace for their 5th straight winning month. The broad market index is up more than 2% in March. Now, Nasdaq is toting a 1.8% advance for the period, while the Dow is up 0.8%. So, while on a longer-term basis, these moves look rather good compared to the intraday move that we did see in coming yesterday. Now, more economic data releases are slated for Tuesday. March's consumer confidence data will be released in the morning. Of course, this is US timing. Now, durable goods orders and the Richmond Fed's manufacturing survey will also provide insight on the health of the manufacturing sector. So, well, largely these are the moves coming in from Wall Street. But with that, Shreyansi, also take us through what's happening in the world of oil.
Well, it might be a breather for the US markets, but when you look at oil, that's
no relief coming there.
Yeah, that's not quite the picture there. Because what we're seeing is a little bit of gains. So definitely not a breather. Crude oil futures rose, and this was as Ukrainian drone strikes disrupt Russian refining capacity as well as Moscow orders output cuts to meet OPEC plus targets. So when I'm looking at the WTI contract for May, that gained about 1.6%, settled around that $81 a barrel mark, and Brent as well added 1.5%, settled around that $86 a barrel mark. Now, Russia has ordered companies to cut oil output to meet Moscow's commitments to OPEC plus, and this is according to reports. Now, several OPEC plus countries have agreed to voluntary production cuts totaling 2.2 million barrels per day through the second quarter. Kyiv has launched a campaign of strikes against Russian energy infrastructure since the start of the year, with Ukrainian intelligence also claiming that a dozen facilities have been successfully hit. So you're looking at cuts for 10% of Russia's refining capacity, if reports are to be believed. So this is largely the move coming in for oil. But when you look at gold prices, now what we're seeing is good moves coming in for gold as well, driven by expectations of interest rate cuts by the US Federal Reserve this year, even as traders await inflation readings this week for confirmation on the timing of these reductions. But the bulk of the moves, the positive moves that we've seen coming in, have been definitely on Bitcoin. Now, Bitcoin spiked to start the final week of March and reclaim that 70,000 level. And the price of the flagship cryptocurrency was last higher by 7.8%. And it also briefly rose above that 71,000 level in the late afternoon. And this was as the stock market closed. Now, Ether as well jumped 7.4%. In fact, most other cryptocurrencies definitely rode the Bitcoin wave. So those are the kind of moves that we've seen come in for Bitcoin as well.
Well, absolutely. So lots of rally when you look at all of those indices, but let's also take a look at the important cues that you need to be watching out for. Now, tomorrow you will have the nifty rejig happening, which will come into effect from the 28th of March. So watch out for this. It's going to be a big move for the market. And when we take a look at the global cues, then 28th of March from the US, you have the initial jobless claims as well as GDP data coming out. From the UK on the same date, you have GDP data coming out as well. So watch out for all of these macroeconomic indicators, important numbers. And from the Eurozone, then you have economic confidence, consumer confidence also coming in. And moving on to corporate action, today is going to be an important day to watch out for a couple of stocks, the likes of Wockhardt, because that board will be meeting to mull their QIP issue price today. And today is also the annual general meeting for Varun Beverages. So we'll see how both of these stocks do in today's trading session. Tomorrow is going to be the last day to buy Garware Tech. to be eligible for their share buyback, and the ICICI Bank shareholders will also be meeting to mull the delisting of the demerger of the company, so that will be in focus tomorrow as well. And 28th of March, shares of Persistent Systems will be trading X stock split. Now remember, the face value is going to come from 10 rupees per share to 5 rupees per share, so that also counter will be one to watch out for. And CRISIL will be distributing its dividend of 28 rupees per share. 28th March will also be the annual general meeting of CRISIL, so watch out for that. And when you take a look at the primary markets, then you have one counter that will be opening for subscription today, and that is the SRM Contractors IPO. So that IPO opens today, so well, watch out for all of these cues in today's as well as the entire week's trading session.
Well, those are a lot of cues to keep our eye on, but kick-starting our coverage this morning with news flow from China. Speaking at the China Development Forum 2024, Premier Li Qiang highlighted the potential of the Chinese economy, saying that recovery of the Chinese economy is strengthening with high-quality development accelerating. Also clarified that their long-term development of the economy remains unchanged.
Alright, with that, let's shift focus to the US, where UBS expects the S&P 500 to end 2024 at current levels. Now, analysts at the bank say a soft landing is their base case for the US economy, including a moderation of economic growth, further falls from the inflation rate, as well as lower interest rates. Now, an overall cautious stance in the near term is what UBS is expecting, and they also expect some volatility as investors adjust expectations for the Fed Reserve policy easing.
And staying with US then, new home sales have unexpectedly declined in February, this after mortgage rates increased during the month. However, the underlying trend continued to spot strength amid shortage of previously owned houses in the market. The median new house price last month was the lowest in more than 2.5 years, while supply was the highest since November 2022.
Well, let's talk about some layoffs then, because Swedish multinational networking and telecommunications company Ericsson has announced that it will be laying off about 1,200 employees in Sweden. This comes as the company faces slower demand for its 5G equipment, and management also reiterated that a downsizing is part of a broader cost-cutting plan as they expect a challenging mobile networks market in 2024.
And Boeing CEO Dave Calhoun will step down at the end of 2024 in part of a broad management shakeup for the embattled aerospace giant. This comes after the aviation giant faces increased scrutiny after a series of safety incidents and manufacturing issues.
Well, alright, shifting focus, the United Nations Security Council has adopted a resolution demanding an immediate ceasefire in Gaza after US chose not to veto the measure. US's move would hurt Israel's war efforts and bid to release more than 130 hostages, which are still held by Hamas militants. Also following the UN vote, Benjamin Netanyahu cancelled a visit to Washington, which was due to discuss a planned Israeli military operation in the southern Gaza city of Rafah.
And we're back with the latest edition of Times Now Summit. Over the years, Times Now Summit has been championing pertinent national agenda points where India's leadership, leading thinkers and national influencers come together to define the action plan for India's progress, themed India Unstoppable. This year, we will focus on charting India's remarkable journey and its increasing influence on the global stage. Join us on the 27th and 28th of March in New Delhi and watch the who's who of the political corridors share their views. Do stay with us for all the highlights and all the action as the action begins here only on Times Now. Welcome back. Thank you so much for staying tuned in. Well, let's take a look at how the Asian markets are faring, and Asia Pacific markets were mixed as of now, and this is as the US market, of course, takes a breather following a rally sparked by optimism over the Federal Reserve's interest rate stance. But let's take a look at what Kospi is doing. Kospi is up over 1%. When you look at Hang Seng as well, that is also in the green. On your screens, up 0.7% nearly. And when you look at Shanghai as well, Shanghai is up 0.1% thereabout. Nikkei, on the other hand, opened flat. Let's see what that is doing as of now. Nikkei is also up 0.1%. And ASX 200 as well. was flat earlier and is currently trading with a slight negative bias, but not doing all that much when you look at ASX 200 as well. So that's largely the handover coming in from the Asian markets. Well, on the Nifty, we did close above the 22,000 level. And today the Nifty implied is indicating a muted start as of now, not anything that is being indicated except a muted start, because we did close at that 22,096 level, and currently the Nifty implied is indicating a start above that 22,000 level. 22,120 is what it's signaling to at this point.
Well, so all right, with that we'll see how the Nifty actually opens and how our markets pan out today. But with that, we have a power pack lineup for you on the market today. Starting at 9:20, we will be joined by Dinshaw Irani, the CEO at Helios Mutual Fund, and he'll be here to talk about how he is navigating the current markets and the themes that he's liking as of now. Moving on, then at 9:30, we will be joined by the management of Prestige Group. The CMD Irfan Rasak will be joining us to talk about that acquisition that they have made of the land parcel in NCR and what's the growth roadmap when that they see when it comes to the NCR region. At 9:40, then we will be joined by Anil Kothuri, the MD and CEO of Fedbank Financial Services, and they'll also be here to talk about what's next for the company and what are they charting in terms of growth. At 9:50, we will be joined by Kabir Ahmed Shakir, the Chief Financial Officer at Tata Communications. And this is a conversation you don't want to miss, because he is also going to be joining us to talk about the company's growth roadmap ahead and the plans that they have going ahead. At 10 o'clock, then we will be joined by Ram Praveen Swaminathan, the MD and CEO of Mahindra Logistics, who will be here to talk about the demand trends that the company and the industry are watching as of now. And well, at 10:10, we have Athar Sahab, the MD at Zuari Industries, also here to talk about the industry outlook and the plan going forward for the company as well. So, well, stay tuned to TM Today, the market today, and catch hold of all of these managements and the conversation that we have with them.
Welcome back. Thank you so much for staying tuned in. On to an 18-hour exclusive, then we learn from reliable sources that the Indian government believes there is strong growth visibility for the economy for at least the next 3 years, and that is reflected in the buoyant stock markets. We're picking up from sources that the government is not in favor of any regulatory intervention in the market. My colleague Prakash Priyadarshi is standing by with more details. Prakash, take it away.
Yes, we are learning from our sources that the Finance Ministry is not in favor of any regulatory intervention in the stock market. We are given to understand that the government is of the view that over-regulation of market can lead to market nervousness. Therefore, Finance Ministry in favor of free market mechanism. Sources are also saying that the government is committed to predictable and a simple tax regime going forward, and it believes that the fundamentals of the Indian economy are robust. In addition to that, sources are also indicating that the government are in favor of increasing participation of retail investors in the stock market, and there is predictability of high growth in the Indian economy for next 3 years. Along with that, we are also given to understand that the government is of the view that we have reached at a position where financial savings are now migrating to financial market, and stock markets are reflecting the fundamentals of the market.
Alright, thanks Prakash for all of those details. Let's move on then. And a slew of stocks will be in focus on the back of their management meets. Now, what are the key takeaways? Ashesha is joining us with all of those details. Good morning, Ashesha. Take it in.
Well, yes, first up, let's talk about Torrent Pharma, where Citi met with the management of the company and they said that investments in the branded markets are expected to drive operating leverage for the company from here on. As far as their generics business is concerned, they say that it has bottomed out and it's likely to pick up in the next few quarters. Balance sheet too is expected to turn net cash positive in the second half of FY26. They keep looking for inorganic opportunities, and non-India markets too is growing very well. So very positive commentary that has come in from the management of Torrent Pharma. Moving on to CG Consumer then, where Nomura met with the management, and over here as well we have some positive management commentary that has come in. First up, they've spoken about the growth prospects of the company, where they say that the business can grow over the next 5 years. It can double over the next 5 years, and they see margin expansion led by operating leverage of the company. Butterfly EBITDA margins can touch double digits by the second half of FY25. FY25, and they expect a price increase of about 4 to 5%, and they expect further price hikes in the first half of FY25 as well. So very positive commentary that has come in from the management. Lastly, let's also talk about the IT space, and KPIT Tech meanwhile is also quite positive. They say they see stable growth visibility for the next 4-year period. Deal wins, consumer activity and conversations and win ratios continue to remain steady, and they see $100 million plus deal wins are yet to be awarded. So slightly muted commentary that has come in from the management of KPIT Tech, but otherwise Torrent Pharma and CG Consumer will also be in focus on the back of very positive commentary that has come in from the management.
All right, thanks Ashesha. So those are the stocks that will be in focus on account of their management meets, but which are the counters that will be in the spotlight or likely to be in the spotlight on account of news flow then?
Well, yes. First up, let's talk about Hindustan Aeronautics. So the company has signed memorandum of understanding with Guyana Defence Force for an order worth about 194 odd crores. On the back of this order win that has come through, HAL will be in focus today. Meanwhile, Welspun Corp, where the company has signed a 512 crore contract with Saline Water Conservation Corporation. So this is also an order win that has come through. Keep an eye out on Welspun Corp as well. Moving on to Ultratech Cement, some expansion plans coming in over here, where the company said that it has commissioned additional capacity of about 1 million tons per annum at its Uttarakhand facility, taking the total capacity of the company to now about 138 MTPA. Remember, this is in line with company's goal of reaching total capacity of 200 MTPA by FY30. So some expansion plans coming in over here. Ultratech Cement will be in focus on the back of that. Moving on to Bharti Airtel then, where Bharti Airtel's unit Bharti Hexacom will be briefing media about their IPO plan. So it is Bharti Airtel's unit which will be coming up with an IPO in the month of April. A big news, keep an eye out on Bharti Airtel as well. Moving on to Maruti Suzuki then, where the company said that they will recall about 11,800 units of Baleno and 4,200 units of WagonR, which were manufactured between July and November 2019. Slightly negative news, keep an eye out on Bharti Airtel as well. Two other counters which will be in focus on the back of order wins. One is Rail Vikas Nigam, where the company has won orders worth about 230 crores, and second Railtel, where the company has received work order to the tune of 36 crores. So keep an eye out on both these counters on the back of order wins that have come through.
All right, Ashesha, thanks so much for taking us through this. We will definitely be keeping an eye out on all of these stocks in today's trading sessions. But with our viewers, it's time for a short break on this edition of Market Cafe. We'll be right back with more stock-specific news and updates. Hi there, welcome back to Market Cafe. Now time for some important market opinion coming in from Motilal Oswal's Gautam Duggad. He spoke about the road ahead for the mid and the small caps, the valuation metrics, and where is value in the PSU basket. He also says he's bullish on PSU banks. Let's listen in to his rationale.
BSE PSU index is up somewhere close to 90% if I'm not wrong. But look at the earnings pool of the entire PSU basket. If I look at FY18, the total earnings of PSU were about 80,000 crores, right? Which was the bottom in this cycle, right? From FY18 till FY23, the earnings went up from 80,000 crores to 380,000 crores. And the first 9 months of FY24 already 4 lakh crore of earnings have been delivered, right? As a consequence of that, the BSE PSU index P is still at 11 times. Now one can argue that the same P used to be 7-8 times and now it is 11 times. And of course, index P always is a bit misleading because it hides a lot of things, because there are too many companies in an index and some companies will be expensive, some will be cheaper. The point is, at an index level, if you see things when it comes to aggregate PSU basket, at 11P, I won't call it a bubble or a fraud. Now, whether there are some companies which have run too far ahead of themselves without any earnings support, the answer is yes. But are there still companies which are available at decent valuations, good dividend yield support, and decent earnings growth? Again, the answer is yes. So it's a very complicated kind of a situation where some companies are very expensive, even within PSU. Some are still value buys. In fact, if you look at our model portfolio, you will find there are 5-6 PSU names. So you've been very positive on PSU banks for the last 2 years. We have the highest overweight on PSU banks in our model portfolio since April 2022. And still the banks that we have in our model portfolio are trading at 1 time and 1.2 time price to book, despite having doubled or tripled. And we think that the next 2 years, the earnings is still going to be very decent and healthy for the set of PSU banks that we have in our model portfolio. So, you have to dig deeper. You have to look at a lot of things, how the BSE, PSU, RE, the index ROE is looking at, how's the cash flow been. It's very simplistic to say that based on few stocks, the entire basket is frothy. I beg to differ there.
One clarification, quick one. When you say aggregate PSUs, you're talking about all the PSUs, metal, mining, power, PSU banks, everything into one, or you're talking about non-banking PSUs put together? Which
No,
index?
I'm taking everything.
Okay, and which index were you referring to? It is 11 after this kind of a performance on earnings?
Yeah, like I said, for 9 years earnings were flat. 9 years the index had done nothing. Its index has started doing well only in the last 12, 18 months, while earnings has bottomed out in FY18. You can obviously dig deeper even there, and you will see that the incremental earnings between FY18 and 23, 50% of them came from a single sector, which is PSU banks. The next 30% came from metals and oil and gas. And then the rest of the 20% from all other PSU sectors put together, which is utilities, defense, and everything else. So PSU bank cycle, which changed in FY18, in fact, the banking cycle itself changed in FY18. If you look at the Nifty financials, there were 11 financial companies in Nifty, and there are still 11, maybe 10 now after the merger of HDFC. If you look at the aggregate profit pool of these 11 companies back in FY18, in Nifty only, their profit used to be 45,000 crores. Now, as we are about to close FY24, they are at about 2.5 lakh crores. And next year, our expectation is that the only financials part of the Nifty, their total profits will be 3 lakh crores. Now, 3,40,000 crores was the profit of entire 50 Nifty companies in FY20. 5 years later, that is FY25, we are talking that just the 10 financial companies will have that 3 lakh crore of profit pool. So the profit picture, Ajay, in India has changed considerably. Without bothering you too much with numbers, but let me tell you one more number. FY20, the total profit of Motilal Oswal coverage universe was 4,28,000 crores. As we are about to close FY24, the total profit has moved to 11 lakh crores. So that's a 4-year earnings compounding of 27%. The equivalent number for Nifty 50 on a 4-year basis is 22%. You look at the performance of the index, it broadly tallies with the underlying earnings growth. Obviously, within the index, some sectors would have done better, some would have not done as good as others. But the point is, broadly, the market has respected the underlying earnings growth. When earnings were tepid for 10 years between FY10 to 20, the market was also tepid. You got 8.5% return in Nifty in that 10-year period, when earnings compounded at just 6.5%. Last 4 years, earnings have done well, so markets have also done well.
Gautam, what is the outlook when it comes to the IT space? Does that cautious stance still continue to remain due to large uncertainties? And in light of that, if so, would the strategy be to look at a mix of large and mid caps, or would you stick to just the large?
So as far as IT is concerned, we are running an underweight stance in our model portfolio. While the stocks have underperformed, especially the large caps, because if you look at the prices of some of the large caps today, they're still trailing the prices that they had in October 21. Now, with Accenture's guidance yesterday and commentary, I think the softness can continue to prevail, and you might see a little more earnings downgrade. Expectations are quite moderate there. It's not as if that people are expecting heaven from IT in F25. Our preference within our overall underweight stance is still with large cap, because we find slightly better risk reward value proposition in large cap IT versus mid cap IT.
Well, as promised, let's also take a look at what the brokerages are saying, and they're talking about HDFC Bank. Let's figure out what kind of re-rating triggers they're talking about, and Gaurav is standing by with just that snapshot.
Well, yes. Now, Goldman Sachs has actually maintained its buy rating and given a target price of 15 rupees, because what they believe is that the scenario analysis suggests that the EPS is near the bottom levels. If you also look at the HDFC's performance, it has been slightly narrowed if we compare it with the Nifty 50, and that is why they're giving this kind of information is giving them a little bit of confidence that HDFC Bank may outperform in coming days. Talking about the confidence from investors, they believe that this has remained low, and this could be a key for HDFC Bank for coming ahead. And still, they have maintained the buy rating with a target price of 15 rupees per share. Let's also talk about what CLSA has to say about HDFC Bank, because they have also maintained outperform rating with a target price of 1650 rupees. Because because they believe that we may see some kind of improvement in net interest margins because bank is very confident on maintaining its profitability ratios, and that is why a bullish view coming up from CLSA as well. Let's also talk about Tata Motors, because now CLSA has maintained its outperform rating with a target price of 1133 rupees. So what they believe is that we have seen significant growth in JLR segment. Specifically, if we talk about the monthly figures for the first 2 months of FY 2024, we have seen 10% increase on a YY basis. And talking about the inventory levels also, they have seen healthy inventory levels in USA. And lastly, if we talk about Land Rover, the discount has been declined somewhere, and that is why this bullish wave is coming up on Tata Motors from CLSA. Let's also talk about telecom sector, because now UBS has upgraded the rating for Vodafone Idea to neutral with a target price of 13 rupees, and while maintaining neutral rating for Bharti Airtel, they have upgraded the target price to 1310 rupees. What they believe is that we may see some kind of tariff hike, so they are expecting 10% tariff hike when the elections are over, but still there will be a limited upside for both these companies. For Vodafone Idea, there will be limited upside because of the fundraising plans that they have, and for Bharti Airtel, they believe that we may see some increase in the dividends, and that is why, despite having a significant growth that we have seen in the company, they have maintained its neutral rating but hiked the target price to 1310 rupees. And lastly, let's also talk about Skipper, because Incred has now initiated with ad rating and a target price of 400 rupees per share. They believe that this company is basically India's largest and the only integrated T&D company, and this is actually among the top 10 companies across the globe. And talking about the order pipeline, the company has a strong order pipeline going ahead, and they also expect revenue growth to remain strong, and at the same time margins to remain consistent. And that is why this bullish wave coming up on Skippers as well. So all in all, these are the companies on the brokerage radar, and back of this, we will also keep an eye on all these companies.
Well, absolutely, Gaurav, that's spot on. We'll be keeping an eye out on all of these companies on the back of these brokerage notes this morning. But let's move on then. And Jefferies has released an interesting note on the dominant brands on Amazon. In the world of personal care products, HUL maintains dominance despite some surprises coming in. But in food and beverages, Tata Consumer seems to top the charts. My colleague Winnie is here to get us all of these interesting details. Winnie, good morning. Take it away.
So absolutely interesting details that are coming in from this note from Jefferies and the brands that have been ruling Amazon. So let's talk about the soaps category. When you talk about soaps, we've seen HUL as well as ITC leading, and HUL actually making a dominant position in the soaps category, while in body wash also HUL was quite dominant as well. What missed out was in terms of ITC's Palmolive in the soaps category, but HUL leading both in soaps as well as in the body wash category. In hand wash, when you're looking at it, we have brands like Reckitt, Colgate as well as Wipro, which is making the list of the top categories and the top 10 categories as well, while HUL's one of these SKUs in the body wash category, actually, I beg your pardon, hand wash category, was something that managed to make the list. But these were the three top names in the hand wash category. Let's move on to hair products. What did well was L'Oreal was something that actually outpaced in terms of HUL's product, while in hair oil, Marico continues to be in the top list as well over there. Love and Beauty, that's the new entrant that has come in from HUL. That seems like it's making a bit of a mark in other categories of the hair product. It's a premium product category by HUL as well, and seems like it's making the mark in the hair product category. Let's move on, talk about deodorants as well as razors. Now, when you talk about deodorants, Nivea was something that led HUL's Axe, while in terms of shaving, we did have Gillette, which led in terms of razors for men, while in competition in the women's category was quite increased in terms of when you can look at it in terms of pace, and Gillette was not something that was leading in the women's category. A lot of competition that is there in the women's category. In terms of body cream, we did have digital first brands that actually did better than the listed players, so HUL and even L'Oreal. It was better than not better than the digital first brands. So digital first brands like Honasa, Minimalist actually was something that did much better in terms of the body cream category. HUL's CC creams, that did well in the CC cream category, while in terms of sunscreen, again we did have Honasa that managed to make the spot as well. 4 out of the top 10 products were coming from Honasa. Nykaa's private brand also did well, while in face wash we did have smaller brands that were doing much better. Lastly, in home care categories, let's pull that up. We had HUL, P&G as well as Jyoti, which did well in the detergent pack. Liquid detergents also HUL led. Albeit when you look at it in terms of GCPL, that was making the name over there as well. And fabric softener, we did have Wipro that was holding on to good gains. Duopoly, that was there actually between HUL and in terms of Jyoti Labs for the dishwashing category. Food and beverages, we did see Tata Consumers making the list, Dapar's Vedic tea also making the charts as well, while in terms of Girnar's Desi Kava was also topping the list as well in the food and beverages category is what I would like to pull up as well. So food and beverages category, we have Tata Consumers, Daburs making the list over there, while Maggi obviously continued to be unmatched in terms of despite ITC, Capital Foods, none of them Maggi actually led the charts in terms of the noodles category. And in soups, we did have HUL as well as Capital Food, which are fighting between each other. But yes, that's how the food and beverages category looked like.
Well, all right, Vinny, thanks so much for that. Very interesting takeaways coming here. And Shansi, I couldn't help but notice Maggi is yet again among the top, among the top inclusions in the food and beverage list.
Absolutely, Maggi is ruling the roost, and who could guess that that is going to happen? Absolutely everybody, right?
Absolutely everybody, because such a quick fix and such a very like go-to 2-minute snack. And I understand it's unhealthy, but it's still my favorite go-to snack. I don't know about you, but well, this love for Maggi that started in my childhood has continued even
but you
now.
know what really stands out to me is that there's Kava also that is also making its entry in that mainstream of things, and that looks like I'm gonna have to swipe away my coffee and tea for a little bit of Kava.
Well, yeah, green tea is, I wouldn't say it's a new fad, but green tea is taking over the internet because of how healthy it is. On the other hand, if you see HUL's Nor has been excluded from the list. So on one hand, you see soups, the main player in soups, at least I would say, is not a part of this list. But what's also making a surprise entry is Kava and green tea. So well, very interesting this coming over there. But with that, let's also get a move on then and talk about what brokerages are flagging off on the life insurers front. Let's take a look at what Morgan Stanley has to say. They're saying that the final surrender value norms seem quite manageable as of now, and surrender value norms suggest low risk to the VNB margin. Now remember, VNB stands for value of new business. So they're saying that that looks quite positive, and they're expecting HDFC Life to perform better in the near-term insurance sector as well. Moving on then, let's talk about what Investec has to say, and they're saying that the surrender value regulations remain unchanged. Surrender value norms are looking positive for HDFC Life as well as Max Insurance, and CLSA then also believes that the relief on surrender value for HDFC Life and Max Life will pan out well for both of these companies. They believe that Max Life is the best performer in FY24 in terms of their premium, and they expect healthy margins for Max Life as well. And now this makes Max Life CLSA's preferred pick to play the entire insurance segment. On the other hand, remember what Morgan Stanley had to say. They prefer HDFC Life as one of their top picks. So, well, interesting note coming in on the insurance front. Also remember that now that 31st March is just around the corner and there is been buzz about tax, the insurance sector could be in focus, because remember, under Section 80D of the Income Tax Act, you can claim an exemption of 1 lakh rupees if you pay off your health insurance premium. So I think on the back of that, insurance companies will also be in focus, Shansi.
Absolutely, and what will also be in focus is definitely Indigo, and a couple of brokerages have come out with their notes. First up, let's take a look at what Jefferies is saying. They've saying they've upgraded the counter to hold from underperform, and they've also raised the target to 3,435 from 2,500. They're talking about, in terms of the growth, they're talking about strong capacity growth guidance, and they're also saying that grounding impact will appears to be contained at this point. They're saying that there's a precarious capacity situation that Indigo has, and pilot fatigue norms may constrain capacity is the word coming in from Jefferies. And when you look at what UBS is saying as well, UBS has a buy on the counter. They've also hiked the target to 4,000 from 3,900. And they're talking about this earnings beat that will continue in the near term. So that's what they're charting out for the counter. And they're also maintaining a positive stance on growth prospects as well. So positive commentary coming in from UBS as well as Jefferies when you look at Indigo.
Well, all right. So that was on the stock-specific front. But Shansi, how can we not talk about the IPL action that we did see coming yesterday, right? And well, it was a holiday yesterday, so we could sit back, relax at home, and enjoy all of this IPL action coming in. And well, I was glued to my screen because Punjab RCB, was a rather nail-biting thriller, if you could call it that. RCB managed to win somehow with just 4 balls remaining, and they won by 4 wickets. And on the other side, I was almost convinced, Shreyanshi, that Punjab is going to bag this one as well.
Absolutely, and it's very interesting what has happened, right? Because you see the tides turning for the team, and you're
Absolutely.
like, oh, is this the same match that I'm watching? Because it looks like a different team's winning.
It does. But with that, let's get a move on and talk a little bit about tax, because as the end of the financial year approaches, it becomes essential to make well-informed decisions about tax-saving investments. My colleagues, I caught up with Nehal Mota, the co-founder and CEO of Finovate Financial Services, as she shares some insights on how employees can leverage on uniform for tax-saving purposes. It's a rather interesting chat I had with her. Lots of quirky tips and hacks that are very easy to implement in everyday life, but we could forget to use those when it comes to tax saving. She helped us with a lot of those, so listen into what she had to say. Let's talk about the uniform allowance, because that is a common benefit in many workplaces as well. So help us understand how this can translate into a tax saving mechanism, and how does it work?
So your employer has to officially tell you that what uniform or what kind of attire is appropriate for the kind of profession or work which you are into. So once you've been told that this is a certain kind of professional attire which you need to maintain when in workplace, and if you are making those expenses for that kind of attire, then again on actual supporting bills, you can claim that as an allowance, and it can be out of your taxable limit. As such, there is no capping, but whatever we are talking about, all this needs to be in a very reasonable limit. I can't go ahead and claim lakhs of expenses on, say, uniform or something. So everything what we are talking about, while there are no specific, limits where this is capped at, but this all needs to be in a reasonable limit. So if your employer has said that for you to maintain that professional work, a certain kind of attire is needed, and you have gone ahead and purchased that kind of clothes, then against the actual supporting, you can claim that allowance.
Well, with that, we're out of time on this edition of Market Cafe on ET Now. From me, Shreyanshi Singh, Snehi Shah, as well as the entire team that put this show together, thank you so much for tuning in. But you don't go anywhere, because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.